This is Mike Paulenoff, MPTrader.com, January 31st, 2010. This is the third installment in our Charts of the Week video update. Right now we're going to look at the dollar as depicted through the UUP ETF, the PowerShares Deutsche Bank US Dollar Bullish Fund. So anybody who's long this instrument is in it because he or she thinks that the dollar will appreciate. And it looks like in the last, since the end of November, the dollar in fact has appreciated. But more than that, what I see when I look at this chart, what pops out at me right now is this. You have an accumulation pattern, a base pattern from last September through January. And at the end of January, the dollar, the UUP broke out, gapped up on Friday, and closed above its declining 200-day for the first time since, way back in May of last year. So you have an accumulation pattern, a base pattern, rounded base, breaks the neckline or the resistance plateau at 2320. Measured move will take you to somewhere 24 to 2420, which would be, 3% or so, 3.2% higher than where we are now, which would be a sizable move. In addition, what do I see when I look at this chart? Notice that the first up leg failed at the prior high, right? 2320 or so. Then the UUP pulled back, and as the 50-day moving average was rounding to the upside, it held support and took off. So it took off from the 50-day, crossed above the 20-day. Now the 20-day is rising, the 50-day is rising, and the 200-day is declining. But the momentum coming out of this base, as depicted also by the RSI down here, is suggesting we have higher to go. Now, I don't know if this is going to be a panic buy. I don't know if the stock market's going to fall apart more and whether there'll be a flight to dollars. I don't know, but all I can tell you from this chart is that the dollar has more upside directly ahead. But let's look at it a little differently. We'll condense the chart and go back to November of 08 to present. So here we are right here. Here's the UUP. Here's the base. And what are these? I've overlaid a 20 to 23 week cycle. Low to low. Low here to low here to low here. It seems like there's a fit in this cycle. Well, if the new cycle low, if the last cycle low occurred at the end of November, and it's a 23 week cycle, and this is a bullish type of cycle compared to the prior two cycles, which were bearish cycles, then perhaps we should look at this cycle as saying, well, if 50% of the cycle is where the dollar or where the movement should peak, then what we're looking at is perhaps a move that takes you out to the end of February, which is an entire month of more upside. But more often than not, a bullish cycle ends in the 2/3 period around here, which would mean that we're talking about the end of March for the dollar. Now, if we are to think that this move in the dollar is going to go up another 3% and it won't peak until the end of March, that's 8 weeks. I doubt that's the case. Something tells me that between the cycle work and the acceleration and the gap up above the 200-day, something else is going on here. In the dollar, there's going to be a mini panic into the dollar. And the dollar is still the biggest short position in town. So there are lots of shorts to cover here. My suspicion is the dollar is going to go higher than we think. And if we make this chart just a little bit messier and just put a Fibonacci retracement on it, let's see where it could go. Okay, 2380 is a 38% retracement. 2440 is here, and that's a 50% retracement. And if it goes to a 62% retracement, we're talking about almost $25 for the UUP. My suspicion is that the dollar is going to go somewhere to either $24.50 to $25 in the UUP, based on the UUP, because the cycle work is telling me that we're in an up cycle now after a breakout from a base formation.